Imagine this. You open your mailbox and there's an envelope from your HOA. Your heart skips a beat because in HOA land, an envelope can contain one of three things: a friendly newsletter, an invitation to another delightfully orchestrated neighborhood potluck, or a fee increase notice that makes you question your life choices. Our story starts in a tidy subdivision called Oak Ridge Estates. Manicured lawns, tasteful mailboxes, and an HOA board that liked to meet at the local coffee shop and talk about fence colors like it was a democracy. The homeowner who first noticed something off was named Maya. Mid-40s, school teacher, excellent at spreadsheets, and the kind of person who labels leftovers in the fridge. One spring, she opened the HOA statement and blinked. Dues were the same, but expenses? Off. Reserve balances? Shrinking. The landscaping contract? The numbers didn't add up. Maya thought, maybe math is having an off week. But she downloaded the ledger, and spoiler alert, when a teacher looks at a ledger, you don't get 15 awkward parent-teacher conferences. You get a deep dive. Now, here's a quick primer for anyone new to HOA finance, because if you're going to find missing money, you should at least know what you're looking at. HOAs collect assessments, that's HOA speak for dues, and maintain two main pots of money: the operating account, monthly expenses, trash, maintenance, that one mysterious leaf blower that never stops, and the reserve fund, long-term repairs, roof replacements, repaving, that communal fountain that used to be attractive. Proper bookkeeping keeps those buckets separate. Cross them, that's trouble. Maya dove in. She printed the last 3 years' statements, highlighted line items, and started an Excel file that looked suspiciously like an interrogation board on a crime show, Post-it notes included. First red flag. Several vendor payments were labeled vaguely community services. No invoices attached. Second red flag. Reserve transfers happened mid-quarter with no board vote recorded. Third, a recurring payment to a local landscape consultant that nobody had heard of. That, my friends, is the kind of thing that gets a spreadsheet teacher's blood racing. She asked the board for copies of invoices. The treasurer, a very affable man named Greg, said, "Oh yes, I'll bring them to the next meeting." 2 meetings came and went. Greg's invoices did not. He said his home printer had issues. The printer had issues? Red flag number 4. At this point, Maya adopted a new hobby: asking polite, relentless questions. It's a hobby I recommend. Because the HOA had never had a professional audit in 10 years, that's not a crime, but it's like not changing your car oil and then complaining about things crashing. Maya convinced a few neighbors to request a financial review. The board agreed, reluctantly, to a limited review. That's like asking a plumber to check a pipe and them saying, "I'll take a quick look and then I'll install a jacuzzi." The reviewer, a local CPA named Elena, came in with a laptop and a thermos and started poking around. She asked for bank statements, canceled checks, invoices, and the previous board meeting minutes. 2 days later, she called Maya and said, "We have to talk." That phrase is always ominous. It's the prelude to "your phone bill was charged to a department that doesn't exist." Elena's review found a few classic patterns of HOA money leakage. Pattern 1, unauthorized reserve withdrawals. Someone had transferred money from reserves into operations multiple times, claiming emergency repairs. But where were the contracts? Where were the receipts? Pattern 2, payroll anomalies and fake vendors. The HOA payroll included a part-time maintenance clerk who never clocked hours. Pattern 3, round dollar payments. Suspiciously neat transfers to a local vendor named Silvercrest Services. Those round numbers are what forensic accountants call red meat. Now, let's be clear. Missing HOA money can happen for several reasons. 1, greed. Someone deliberately skims. 2, incompetence, sloppy bookkeeping. 3, collusion, vendors and board members cooking the books together. And 4, the sad cousin of all of these, negligence. In Oak Ridge, Elena found a bit of everything. The most glaring item was a contractor invoice for repaving a cul-de-sac $28,400. The invoice looked official. Company letterhead, neat dates, signature-looking scrawl. Problem? No one remembered a cul-de-sac being repaved. The potholes were still there. The cul-de-sac had spent the last winter as a pothole-themed amusement park. Maya drove there with a reusable coffee cup and a camera and took photos. Concrete, unpaved. Invoice, buried in the PDF bank like a time capsule for trouble. Elena called the vendor listed on the invoice. That's a good move. Real businesses pick up the phone. We learned that the vendor, Ridge Paving LLC, answered and politely asked for their check number. Ridge Paving LLC insisted they'd been paid, and then, plot twist, their accounting department had no record of a job at Oak Ridge. That raised alarms. By now, heads were turning. Maya convened an emergency town hall. The chairs were full. People arrived with cookies, skepticism, and one very loyal terrier named Bruce who barked at spreadsheets like they were invaders. Maya presented the evidence: invoices, bank transfers, and the photo of the unpaved cul-de-sac. You could feel the room tilt from, "This is fine," to, "Wait, what?" in about 18 seconds. The HOA board appointed a special committee. Greg, the treasurer, looked surprised, which, when you're the treasurer, is not the best look. The committee asked Greg for records and explanations. He said something about outdated vendor contact lists and, "I thought it was handled." That's the classic "I thought" defense. Not legally robust, but theatrically useful. The committee dug deeper. They discovered that several payments had been authorized with digital signatures from accounts opened under slightly misspelled names, the sort of tiny alterations that slip past cursory checks. Someone had created convenient paperwork, work orders, signed authorizations, and even a fake subcontractor who did the job. The fake subcontractor's address was a mailbox in a strip mall. That mailbox had seen more legal receipts than a divorce court. At this point, the committee called the county sheriff's financial crimes unit. That escalated things. Law enforcement likes patterns. They like paper trails even more. The detective assigned was Rivera. Calm, precise, coffee-dependent. Rivera liked to say, "Paper remembers." I love that line. Just think about it. A recalcitrant bank statement will tell on you faster than a guilty cat. Rivera subpoenaed bank records, phone logs, and vendor paperwork. It turned out that Silvercrest Services was a shell company with an address on a residential street. Calls to Silvercrest forwarded to Greg's personal cell phone for several months. Phone records showed calls between Greg and the Silvercrest number at odd hours. That is not great if your job is to steward community funds. The detective next followed the money. Bank transfers from the HOA account moved to a business account that suddenly paid large cash withdrawals to individuals. Those individuals then bought high-ticket items, a used truck here, electronics there, things that don't scream community service expense. Rivera flagged these transactions, and the forensic accountant drew a line from the HOA operating account to a handful of personal accounts. It's like the money was doing a little vacation through several wallets before ending up in a beach house labeled, "Not mine, definitely mine." Left. Greg was placed on administrative leave while the investigation continued. The HOA froze access to online banking and engaged counsel. That's when the board realized something else. No dual signature policy. One person could sign transfers. One person. That's like letting one person have the keys to both the candy store and the accounting ledger. Not wise. The case moved from unpleasant HOA meetings to criminal investigation. Charges were filed: embezzlement, fraud, and forgery. The sheriff's office presented their evidence, which included bank records, suspicious vendor paperwork, and that wonderful trophy of logic, the unpaved cul-de-sac invoice. Embezzlement in HOA land is rarer than a quiet HOA meeting, but when it happens, it hits everyone's trust meter hard. The prosecution was methodical. They showed how money intended for reserve repairs ended up as personal purchases, how invoices were created for work that never occurred, and how the consistency of those round sums pointed to deliberate transfers. There's a reason auditors use phrases like structural irregularities. It's more dramatic than it sounds. Greg pleaded not guilty at first. His defense was a mix of surprise and plausible deniability. I thought these were legitimate vendors. I thought I had authority. And the semi-classic, I had access because previous boards allowed it. That latter claim points to a systemic problem. If governance structures are loose, it's easy for one person to do mischief without immediate oversight. In the courtroom, however, paper remembers. The judge reviewed the bank transfers and the lack of independent board voting records. The defense said Greg had planned to reimburse the HOA. The prosecutor said with quiet certainty, "There are no reimbursements on paper, Your Honor." That line landed. The jury, neighbors, and community members saw the timeline. Money moved, no work performed, and payments funneled to personal accounts. The verdict was guilty on multiple counts. Greg was sentenced to restitution, probation, and a short jail term, plus restrictions on handling any nonprofit or HOA finances in the future. That last restriction is practical and necessary.
After the criminal case, the HOA had to focus on recovery and reform. They hired a forensic accounting firm to pursue civil recovery. Civil suits can claw back some funds, especially if the shell company's bank accounts still have assets. It's not always perfect, but every dollar returned is a win. And the community in Oak Ridge scored back some money. Not all, but enough to repave a section and replace the communal fountain that had been sulking for years. The bigger win, though, was governance reform. Oak Ridge implemented immediate policy changes. Dual signature requirements for transfers over a low threshold, mandatory quarterly audits, vendor verification processes, and transparent monthly finance reports posted online for homeowners. They also created a finance committee separate from the board to provide oversight. These are boring words until they fix things. Then they turn into trust-building tools. Let's pause for a second and extract some real practical lessons, because this is where the rubber hits the road for viewers who live in HOAs, and many of you do. If your community ever smells like financial trouble, here's the playbook. Lesson 1. Demand transparency. Ask for bank statements and meeting minutes. Boards are public servants to the community. Their records should be accessible. If the response is slow, escalate politely. Send a written request. Lesson 2. Separate accounts. Operating funds and reserve funds must be separate accounts. Transfers should be voted on and recorded in meeting minutes. If you see large transfers with no vote, ask questions. Lesson 3. Dual signatures. No single person should be able to move large sums alone. Require 2 signatures for check writing or ACH transfers above a low threshold. It adds friction, which prevents fraud. Lesson 4. Professional audits. Annual independent audits or reviews catch problems early. If your HOA hasn't had one in years, ask why. Insist on it. Lesson 5. Vendor verification. If someone claims a vendor did work, ask for contact info and call them directly. If a vendor can't be reached or has no online presence, be skeptical. Trust, but verify. Lesson 6. Keep your receipts and your photos. If you suspect missing work, photograph the site. Maya's cul-de-sac photos were small evidence that carried weight. Take pictures, hold on to receipts, and keep your records neat. You'll thank yourself later. And a few legal practical tips. Not legal advice, but practical steps people used in Oak Ridge. File an official records request in writing. Document every call. Consider a DOT-style complaint for certain types of HOA mismanagement if state regulators exist. And contact local law enforcement if you find signs of deliberate theft. If you suspect criminal activity, don't play detective alone. Pass your findings to professionals. Back in Oak Ridge, the recovery had bumps. Civil suits can take time and not all funds returned, but the local culture shifted. Board meetings now started with a 15-minute finance summary posted to the community site, and the treasurer's reports included scanned invoices and vendor contact info. The trust rebuild was slow, but it was tangible. People started volunteering again. Bruce the Terrier stopped barking at spreadsheets and developed a mild interest in community bake sales. I want to close with two things: one human beat story and one big picture takeaway. The human beat: Maya got a letter from a neighbor who'd been on the fence about attending meetings. She wrote, "Thank you. Because of you, I understand how our money works. I told my nephew to stop letting my bank statements accumulate dust." She laughed and said, "You only need to look when the numbers look sad." It's a little victory, and those matter. The big picture takeaway is this: community money is a trust contract. HOAs work when people participate, ask questions, and insist on transparency. When systems are lax, bad actors can find opportunities. But when neighbors pay attention, assemble, and demand better governance, the system self-corrects. That's not just civic pride, that's practical defense of your wallet and your neighborhood. A quick action checklist for homeowners: screenshot this. 1. Request the last 24 months of bank statements and the last 24 months of meeting minutes. 2. Confirm separate accounts for operations and reserves. 3. Ask whether dual signatures are required and the threshold amount. 4. Request copies of vendor contracts and contact them to confirm work. 5. If you find anomalies, contact a CPA or forensic accountant and consider filing a police report. 6. Attend board meetings or nominate someone you trust to the finance committee. A final funny note: after all this, Oak Ridge held a Trust Fest, a potluck where the HOA displayed the new financial dashboard on a giant screen, and everyone brought a dish labeled with a budget line, aka landscaping lasagna, reserve fund salad. It was goofy and effective. People asked real questions and tasted the numbers. I recommend a Trust Fest in every neighborhood. Bring bread, we'll all be financially literate together. Thanks for listening to Oak Ridge's story. If you live in an HOA, take 2 minutes this week, look at the bank statements, ask one question, and get curious. Being nosy about numbers is a public service. If you liked this deep dive, subscribe for more everyday justice stories about money, scams, and the little bureaucracies that shape our lives. Until next time, document everything, ask politely, and remember, sometimes a spreadsheet is the most powerful thing in the room.